Unveiling the Vanguard Schwab U.S. Dividend Equity ETF, Insights, Strategies, and Risks Revealed. Welcome to our YouTube channel. Today, we're diving deep into the Vanguard Schwab U.S. Dividend Equity ETF, a popular choice among investors seeking exposure to dividend-paying stocks. We'll explore various aspects of this ETF, from its dividend yield compared to similar offerings in the market to its underlying dividend growth strategy and risk mitigation techniques. Join us as we unravel the intricacies of this dividend-focused ETF and gain valuable insights into its investment approach. Question 1. How does the Vanguard Schwab U.S. Dividend Equity ETF's dividend yield compare to other similar dividend-focused ETFs in the market? Before diving into the comparison, it's essential to grasp the concept of dividend yield. Dividend yield represents the annual dividend income generated by an investment relative to its market price. It's calculated by dividing the annual dividend per share by the current market price per share, expressed as a percentage. A higher dividend yield typically indicates a higher income potential for investors. The Vanguard Schwab U.S. Dividend Equity ETF, ticker VSDC, is designed to provide investors with exposure to U.S. companies that have a history of consistently paying dividends. The ETF seeks to track the performance of the Dow Jones U.S. Dividend 100 Index, which comprises high dividend-yielding U.S. equities. With a focus on dividend-paying stocks, the VSDC aims to deliver both income and long-term capital appreciation to investors. To assess the Vanguard Schwab U.S. Dividend Equity ETF's dividend yield, we analyze several key factors. A. Historical performance. Examining the ETF's historical dividend yield performance over various time periods provides insights into its consistency and reliability in generating income for investors. B. Dividend growth. Understanding the ETF's dividend growth trajectory and its ability to increase dividend payments over time is crucial for investors seeking a growing income stream. C. Expense ratio. The ETF's expense ratio plays a significant role in determining its overall return to investors. Lower expense ratios can enhance the ETF's net yield, making it more attractive to income-focused investors. D. Sector exposure. Analyzing the ETF sector allocation and its concentration in high-yielding sectors such as utilities, consumer staples, and real estate can shed light on its dividend yield potential. To provide a comprehensive comparison, we evaluate the Vanguard Schwab U.S. Dividend Equity ETF's dividend yield against other similar dividend-focused ETFs available in the market. This comparison includes ETFs with comparable investment objectives, portfolio compositions, and dividend strategies. A. Dividend yield metrics. We compare the dividend yield of the Vanguard Schwab U.S. Dividend Equity ETF with those of its peers, considering metrics such as trailing 12-month yield, forward yield projections, and historical yield trends. B. Risk-adjusted returns. In addition to comparing raw dividend yields, we assess the risk-adjusted returns of the ETF relative to its peers, considering factors such as volatility, beta, and Sharpe ratio. C. Diversification benefits. Evaluating the diversification benefits offered by the Vanguard Schwab U.S. Dividend Equity ETF compared to its peers can provide insights into its risk mitigation capabilities and potential for stable income generation. The Vanguard Schwab U.S. Dividend Equity ETF offers investors exposure to high dividend-yielding U.S. equities with a track record of consistent dividend payments. However, assessing its dividend yield in comparison to similar dividend-focused ETFs is essential for investors seeking the optimal balance between income generation and portfolio diversification. By analyzing factors such as historical performance, dividend growth, expense ratio, sector exposure, and risk-adjusted returns, investors can make informed decisions about incorporating the Vanguard Schwab U.S. Dividend Equity ETF into their investment portfolios. Question 2. Can you provide insights into the Vanguard Schwab U.S. Dividend Equity ETF's underlying dividend growth strategy and how it's implemented within the portfolio? The VSDC ETF is designed to track the performance of the Dow Jones U.S. Dividend 100 Index, which consists of high-quality U.S. companies with a history of consistently paying dividends. However, what sets the VSDC apart is its emphasis on companies that not only pay dividends, but also have a track record of increasing those dividends over time. This focus on dividend growth distinguishes the VSDC from traditional dividend-focused ETFs and aligns it more closely with the principles of dividend growth investing. Key components of the dividend growth strategy. A. Fundamental analysis. The dividend growth strategy employed by the VSDC ETF begins with rigorous fundamental analysis of potential portfolio holdings. This analysis focuses on evaluating companies based on criteria such as earnings growth, cash flow generation, payout ratios, and dividend history. Companies with a consistent track record of increasing dividends are given preference in the portfolio. B. Quality criteria. In addition to dividend growth metrics, the VSDC ETF emphasizes quality criteria when selecting portfolio holdings. This includes factors such as strong balance sheets, sustainable business models, competitive advantages, and management quality. By focusing on high-quality companies, the ETF aims to mitigate risks and enhance the likelihood of sustained dividend growth. C. Sector diversification. The dividend growth strategy implemented by the VSDC ETF also considers sector diversification to ensure a well-balanced portfolio. While certain sectors may exhibit stronger dividend growth characteristics, the ETF seeks to avoid overexposure to any single sector and maintain diversification across industries. D. Risk management. Despite its focus on dividend growth, the VSDC ETF incorporates risk management techniques to safeguard investors' capital. This may include monitoring factors such as valuation metrics, dividend sustainability, and macroeconomic trends to identify potential risks and adjust the portfolio accordingly. Implementation within the portfolio. A. Active management. While the VSDC ETF tracks an index, it employs active management techniques to optimize its dividend growth strategy. This may involve periodic rebalancing of the portfolio to reflect changes in dividend growth prospects, sector trends, or market conditions. B. Reinvestment of dividends. The VSDC ETF typically reinvests dividends received from portfolio holdings back into the fund, allowing investors to benefit from the power of compounding over time. Reinvesting dividends can accelerate the growth of investors' capital and enhance long-term returns. C. Investor education. The VSDC ETF provides investors with educational resources and insights into its dividend growth strategy, helping them understand the rationale behind portfolio decisions and the potential benefits of dividend growth investing. The Vanguard Schwab U.S. Dividend Equity ETF's underlying dividend growth strategy focuses on investing in high-quality U.S. companies with a history of consistent dividend growth. By emphasizing fundamental analysis, quality criteria, sector diversification, and risk management, the ETF aims to deliver a combination of income generation and potential capital appreciation to investors. Through active management and reinvestment of dividends, the VSDC ETF seeks to harness the power of dividend growth investing and provide investors with a pathway to long-term wealth accumulation. Question 3. What is the Vanguard Schwab U.S. Dividend Equity ETF's approach to selecting dividend-paying stocks, and how does it mitigate risks associated with dividend cuts or suspensions? The VSDC ETF seeks to track the performance of the Dow Jones U.S. Dividend 100 Index, which comprises high-quality U.S. companies with a history of consistently paying dividends. However, what sets the VSDC apart is its approach to stock selection, which emphasizes not only dividend yield but also dividend sustainability and growth potential. Key components of stock selection. A. Dividend sustainability. The VSDC ETF prioritizes companies with sustainable dividend policies backed by strong cash flows, earnings stability, and manageable payout ratios. This ensures that dividend payments are not only consistent but also resilient to economic downturns or adverse market conditions. B. Dividend growth potential. In addition to current dividend yield, the VSDC ETF evaluates companies based on their potential for future dividend growth. This involves analyzing factors such as earnings growth prospects, free cash flow generation, and management's commitment to increasing dividends over time. C. Quality criteria. The VSDC ETF incorporates quality criteria when selecting portfolio holdings, focusing on companies with strong balance sheets, competitive advantages, and robust business models. By emphasizing quality, the ETF aims to mitigate risks associated with dividend cuts or suspensions and preserve investors' capital. D. Diversification. The VSDC ETF maintains a diversified portfolio of dividend-paying stocks across various sectors and industries. This diversification helps spread risk and reduce the impact of adverse events affecting specific sectors or individual companies. While dividend-paying stocks offer attractive income potential, they are not immune to risks such as dividend cuts or suspensions, especially during economic downturns or financial crises. The VSDC ETF employs several strategies to mitigate these risks and safeguard investors' income streams. A. Ongoing monitoring. The VSDC ETF continuously monitors portfolio holdings for signs of deteriorating fundamentals or changes in dividend policies. This proactive approach allows the ETF to identify potential risks early and take appropriate action to mitigate them. B. Sector diversification. By maintaining exposure to multiple sectors and industries, the VSDC ETF reduces reliance on any single sector for dividend income. This diversification helps spread risk and minimize the impact of sector-specific challenges or disruptions. C. Quality screen. The VSDC ETF applies a rigorous quality screen when selecting portfolio holdings, focusing on companies with strong financial health, stable earnings, and consistent dividend track records. This quality-focused approach helps mitigate the risk of investing in companies with unsustainable dividend policies. D. Dividend reinvestment. The VSDC ETF typically reinvests dividends received from portfolio holdings back into the fund, allowing investors to benefit from the power of compounding over time. Reinvesting dividends can help offset the impact of any potential dividend cuts or suspensions on investors' overall returns. The Vanguard Schwab U.S. Dividend Equity ETF's approach to selecting dividend-paying stocks is grounded in rigorous analysis, quality criteria, and diversification. By focusing on companies with sustainable dividend policies, growth potential, and strong fundamentals, the ETF aims to provide investors with a reliable income stream and potential for capital appreciation. Moreover, by employing risk mitigation strategies such as ongoing monitoring, sector diversification, and dividend reinvestment, the VSDC ETF seeks to mitigate risks associated with dividend cuts or suspensions and preserve investors' wealth over the long term. Question 4. How diversified is the Vanguard Schwab U.S. Dividend Equity ETF's portfolio across sectors and individual holdings, and what measures are in place to manage concentration risk? Sector diversification involves spreading investments across various sectors and industries to reduce exposure to sector-specific risks and enhance portfolio stability. By allocating capital to sectors with different growth prospects, economic sensitivities, and risk profiles, investors can achieve a more balanced and resilient portfolio. The VSDC ETF seeks to track the performance of the Dow Jones U.S. Dividend 100 Index, which comprises high-quality U.S. companies with a history of consistently paying dividends. While the ETF focuses on dividend-paying stocks, it also emphasizes sector diversification to mitigate concentration risk and enhance long-term returns. Sector allocation in the VSDC portfolio. A. Analysis of sector weights. We analyze the sector allocation of the VSDC ETF's portfolio to understand its exposure to different segments of the economy. By examining sector weights relative to benchmark indices and historical trends, we gain insights into the ETF's sector diversification strategy. B. Sector concentration risk. While sector diversification is beneficial for reducing risk, excessive concentration in certain sectors can expose the portfolio to sector-specific risks. We assess the concentration risk in the VSDC ETF's portfolio and evaluate measures in place to manage and mitigate this risk. C. Sector performance drivers. Understanding the drivers of sector performance can provide insights into the potential impact of sector allocation decisions on the ETF's overall returns. We analyze key factors influencing sector performance and their implications for portfolio diversification. Individual holdings and portfolio diversification. A. Analysis of individual holdings. Beyond sector allocation, we examine the diversification of the VSDC ETF's portfolio at the individual stock level. By analyzing the number of holdings, top holdings, and concentration metrics, we assess the portfolio's level of diversification and concentration risk. B. Portfolio concentration risk. Concentration risk at the individual stock level can arise when a few holdings account for a significant portion of the portfolio's value. We evaluate measures in place to manage concentration risk and ensure adequate diversification across individual holdings. C. Risk management strategies. The VSDC ETF employs various risk management strategies to mitigate concentration risk and optimize portfolio diversification. These strategies may include position sizing, rebalancing, and active management techniques aimed at maintaining a well-diversified portfolio. Sector diversification is a key aspect of the Vanguard Schwab U.S. Dividend Equity ETF's portfolio management strategy, enabling investors to spread risk and capture opportunities across different sectors and industries. By allocating capital to sectors with diverse growth prospects and risk profiles, the ETF aims to enhance portfolio stability and optimize risk-adjusted returns. Moreover, by implementing measures to manage concentration risk at both the sector and individual stock levels, the VSDC ETF seeks to ensure adequate diversification and mitigate the potential impact of sector-specific challenges on investors' portfolios. Question 5. How does the Vanguard Schwab U.S. Dividend Equity ETF strategy adapt to changing market conditions and economic cycles? Navigating through various market conditions and economic cycles is a challenge faced by investors globally. In this dynamic landscape, exchange-traded funds (ETFs) offer investors an efficient way to access diversified investment strategies. The Vanguard Schwab U.S. Dividend Equity ETF, ticker VSDC, is designed to provide exposure to U.S. companies with a history of consistent dividend payments. However, understanding how the VSDC ETF strategy adapts to changing market conditions and economic cycles is crucial for investors aiming to optimize their investment outcomes. In this comprehensive analysis, we explore how the VSDC ETF adjusts its strategy to different market environments and economic cycles. Before delving into the VSDC ETF strategy adaptation, it's essential to understand the various market conditions and economic cycles that influence investment decisions. A. Bull markets. Bull markets are characterized by rising stock prices, optimistic investor sentiment, and strong economic growth. During bull markets, investors typically seek growth-oriented strategies and capitalize on upward momentum in the market. B. Bear markets. Bear markets, on the other hand, are marked by declining stock prices, pessimism among investors, and economic contraction. In bear markets, investors often prioritize capital preservation and defensive strategies to mitigate losses. See economic cycles. Economic cycles encompass periods of expansion, peak, contraction, and trough in economic activity. Each phase of the economic cycle presents unique challenges and opportunities for investors, influencing asset allocation and investment strategies. Adaptive strategies of the VSDC ETF. A. Dividend resilience. Regardless of market conditions, the VSDC ETF's core objective is to provide investors with exposure to dividend-paying stocks with a history of consistent dividend payments. Dividends often serve as a source of stability and resilience, offering investors a steady income stream even during periods of market volatility. B. Defensive characteristics. During bear markets or economic downturns, the VSDC ETF may tilt its portfolio towards defensive sectors such as consumer staples, utilities, and healthcare. These sectors typically exhibit lower volatility and more stable earnings, making them attractive options for investors seeking defensive strategies. See cyclical opportunities. Conversely, during bull markets or economic expansions, the VSDC ETF may allocate more capital to cyclical sectors such as technology, industrials, and consumer discretionary. These sectors tend to outperform during periods of economic growth, offering investors opportunities for capital appreciation. D. Sector rotation. The VSDC ETF may engage in sector rotation to capitalize on changing market dynamics and economic cycles. Sector rotation involves shifting allocations between sectors based on their relative strength, growth prospects, and valuation metrics. E. Active management techniques. While the VSDC ETF tracks an index, it may employ active management techniques to optimize its strategy in response to changing market conditions. This may include rebalancing the portfolio, adjusting sector weights, and selectively adding or removing individual holdings based on their performance and outlook. Risk management amid market volatility. A. Volatility mitigation. Market volatility can pose challenges for investors, impacting portfolio performance and investor confidence. The VSDC ETF may implement volatility mitigation strategies such as diversification, hedging, and dynamic asset allocation to reduce the impact of market fluctuations on investors' portfolios. B. Liquidity management. During periods of heightened market volatility, maintaining sufficient liquidity is crucial for investors to meet redemption requests and capitalize on investment opportunities. The VSDC ETF may actively manage liquidity risk by holding liquid assets, monitoring trading volumes, and utilizing trading strategies to enhance liquidity. C. Stress testing. The VSDC ETF may conduct stress tests to assess the resilience of its portfolio under adverse market conditions. Stress testing involves simulating extreme scenarios and evaluating the impact on portfolio performance, liquidity, and risk exposure. The Vanguard Schwab U.S. Dividend Equity ETF strategy is designed to adapt to changing market conditions and economic cycles, aiming to provide investors with stable income, capital preservation, and long-term growth potential. By maintaining a focus on dividend resilience, employing defensive characteristics during bear markets, capitalizing on cyclical opportunities during bull markets, and actively managing risk amid market volatility, the VSDC ETF seeks to optimize risk-adjusted returns and deliver value to investors across various market environments. As investors navigate through different stages of the market cycle, understanding the adaptive strategies of the VSDC ETF can help them make informed investment decisions and achieve their financial goals. Question 6. What is the potential risk specific to the Vanguard Schwab US Dividend Equity ETF's investment strategy, such as interest rate sensitivity or sector-specific challenges? Investing always involves a degree of risk, and understanding these risks is essential for making informed investment decisions. The Vanguard Schwab US Dividend Equity ETF, ticker VSDC, is designed to provide investors with exposure to U.S. companies that have a history of consistently paying dividends. While the ETF offers attractive income potential and long-term growth prospects, it is not immune to certain risks inherent in its investment strategy. In this comprehensive analysis, we explore potential risks specific to the VSDC ETF's investment strategy, including interest rate sensitivity, sector-specific challenges, and other factors investors should consider. Interest rate sensitivity. A. Impact of interest rates. One of the primary risks associated with dividend-focused strategies like the VSDC ETF is interest rate sensitivity. When interest rates rise, dividend-paying stocks may become less attractive relative to fixed-income investments, leading to a decline in their prices. B. Yield competition. Rising interest rates can increase the yield on alternative fixed-income investments such as bonds, making them more appealing to investors seeking income. This yield competition can put downward pressure on dividend-paying stocks and affect the performance of the VSDC ETF. C. Mitigation strategies. To mitigate interest rate sensitivity, the VSDC ETF may adjust its portfolio duration, sector allocation, or individual stock selection. Additionally, the ETF may incorporate interest rate hedging strategies to minimize the impact of interest rate fluctuations on investors' returns. Sector-specific challenges. A. Sector concentration risk. The VSDC ETF may be exposed to sector-specific challenges if it holds a significant portion of its portfolio in certain sectors. Sector concentration risk arises when a particular sector experiences adverse events or economic downturns, impacting the performance of the ETF. B. Cyclical nature of sectors. Certain sectors, such as energy, materials, and industrials, are cyclical in nature and are sensitive to changes in economic conditions. During economic downturns, cyclical sectors may underperform, leading to losses for investors holding significant exposure to these sectors. C. Sector rotation. The VSDC ETF may engage in sector rotation to mitigate sector-specific risks and capitalize on opportunities across different sectors. Sector rotation involves adjusting sector weights based on their relative strength, growth prospects, and macroeconomic trends. Market and liquidity risks. Market volatility. Like any equity investment, the VSDC ETF is exposed to market volatility, which can result in fluctuations in its net asset value, NAV, and investor returns. Market volatility can be driven by factors such as geopolitical events, economic data releases, and investor sentiment. B. Liquidity risk. ETFs, including the VSDC ETF, are subject to liquidity risk, which refers to the difficulty of buying or selling shares at fair prices due to insufficient market depth or trading volumes. During periods of market stress or elevated volatility, liquidity risk may increase, impacting investors' ability to execute trades. C. Risk management measures. To manage market and liquidity risks, the VSDC ETF may employ risk management techniques such as diversification, active management, and monitoring of trading volumes. Additionally, the ETF may hold liquid assets and utilize trading strategies to enhance liquidity and minimize trading costs. Dividend sustainability and quality. A. Dividend cuts or suspensions. Despite focusing on companies with a history of consistent dividend payments, the VSDC ETF is exposed to the risk of dividend cuts or suspensions. Economic downturns, industry disruptions, or company-specific challenges can lead to reductions in dividend payments, impacting the ETF's performance. B. Quality screening. To mitigate the risk of dividend cuts or suspensions, the VSDC ETF employs rigorous quality screening criteria when selecting portfolio holdings. This includes assessing factors such as earnings stability, cash flow generation, and management quality to ensure the sustainability of dividend payments. C. Fundamental analysis. The VSDC ETF conducts ongoing fundamental analysis of portfolio holdings to monitor their financial health and dividend sustainability. By staying vigilant and proactive, the ETF aims to identify potential risks early and take appropriate action to mitigate them. While the Vanguard Schwab U.S. Dividend Equity ETF offers investors attractive income potential and exposure to dividend-paying stocks, it is not without risks. Understanding and managing these risks is essential for investors to navigate successfully through different market environments and achieve their investment objectives. By being aware of potential risks such as interest rate sensitivity, sector-specific challenges, market volatility, liquidity risk, and dividend sustainability, investors can make informed decisions and incorporate risk management strategies to mitigate these risks effectively. As with any investment, conducting thorough due diligence and seeking professional advice are crucial steps in building a resilient and well-balanced investment portfolio. In conclusion, the Vanguard Schwab U.S. Dividend Equity ETF offers investors a compelling opportunity to access a diversified portfolio of dividend-paying stocks. From its competitive dividend yield to its robust dividend growth strategy and risk management measures, this ETF is designed to navigate through changing market conditions and economic cycles. However, it's crucial for investors to understand the potential risks associated with this investment strategy, including interest rate sensitivity and sector-specific challenges. We hope this video has provided you with valuable insights into the Vanguard Schwab U.S. Dividend Equity ETF. Don't forget to like, share, and subscribe for more informative content on investing and finance. Thank you for watching.